Hi, I'm Tom Lydon, editor of ETF Trends, here in San Diego at the Schwab Impact Conference. And I'm here with Sal Bruno from IndexIQ. Great seeing you, Sal.
Great to be here with you, Tom.
So IndexIQ is known for having, for a long period of time, alternative strategy ETFs. Tell us about the different alternative strategies that you folks offer.
So we offer them in a couple of different varieties. Our most famous one, our most well-known, our largest is QAI, which is a multi-strategy synthetic hedge fund replication, which tries to give you exposure to 6 different hedge fund type strategies using a factor-based analysis. We also have a mechanical implementation of a merger arbitrage strategy. M&A is a ticker on that. And again, it tries to get into actual deals that are announced for merger candidates.
Yeah, so the idea is non-correlated strategies when the stock market or the bond market might be unsettled a little bit, right?
Yes, and we see a lot of similarities at this time this year versus this time last year. We have a potential rate hike on the horizon in December, very similar to where we were at last year. And we saw the impact of that on the equity markets in terms of volatility in January and into early February. Alternatives are a great way to dampen some of that volatility, and particularly QAI and M&A were able to provide a lot of downside protection. In fact, M&A was actually positive during the first 5 weeks of this year when the equity market was down significantly. So we think alts are a great time to have in the portfolio at all points, but especially at times like this.
Well, I think a lot of advisors understand it's been a pretty good ride for stocks, 7-year bull market, great ride for bonds, 30-year bull market. If you are all long, both of those, there's going to be some unsettling times down the road when there is a correction. So how do advisors implement some of your strategies within their portfolios?
So that's a great question, and we're seeing advisors take advantage of the wide variety of different offerings and solutions that we have available. So many advisors are using QAI as sort of a fixed income replacement. It has a very similar volatility profile, but whenever you see interest rates start to rise, and we've looked at this since QAI's inception, there have been 12 times where the 10-year has gone up by 40 basis points or more each time QAI has actually outperformed the aggregate bond universe. And so we're seeing people using M&A or QMM, which is our market neutral, as ways to stay within the equity market, still have equity market exposure, but dampening some of the volatility.
All right, so if you don't have any alternative strategies in your portfolio, QAI has multiple alternative strategies within that one ETF, correct?
Yeah, so it has 6 different hedge fund strategies exposures.
Yeah.
So it's a great way to be sort of an all-in-one solution for a core piece if you just want to get some portion of your portfolio into alts, but you don't want to make the decision, I want to be more global macro, more long-short right now. That's all embedded within QAI.
Yeah, so no better time to think about it than now as you're going and looking at 2017. Hey, we all hope the market's going to continue to blossom, but I think there's a lot of discussion here at the Schwab conference that, we may have some challenges down the road and we need to be prepared, right?
Absolutely. So, alternatives are a great way, and even within alternatives, beyond sort of hedge fund type strategies, commodities and global resources can be a great way to diversify some of your exposure. So we've seen a lot of interest recently. Our global resources ETF, GRES, is up about 24% this year. And we're seeing a lot of people starting to get more focused on that, especially on the back of a slightly weaker dollar that's allowed some of the commodity prices to recover.
Great. And if people want more information, IndexIQ.com.
Yes.
Excellent. Sal, great seeing you.
Thanks, Tom. Good
Thank
to see
you.
you.